up today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Growling and prowling with us out here. We have the Dow Industrials down 193. Nasdaq's up 15. S&Ps are off 20. Gold contract down $8.30, trading $17.05 an ounce. We have silver off 2 cents, $15.75 an ounce. Light sweet crude flat, $24.92 a barrel. Notes and bonds. We get the 10-year flat at 138.30. The 30-year is down 3 at 179.19. And King Dollar's up 285 ticks, trading 100.018. The euro is at 108. The yen is at 107.5, and the British pound is at 123 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good Monday morning. I'm doing well. How are you doing?
Good Monday morning. We're doing great.
Right.
Kicking into the spring, the summer. And this NASDAQ, folks, okay, now what's going to be so cool about today is this. We've said this many, many times, that the NDX 100, bottom line, likes bringing the market up, likes bringing it down, and what you also have inside that NDX is the chip stocks, okay? And what you got out here, the 4 leaders, you got AMD up 3.5%, you get NVIDIA up 2.5%. NVIDIA is breaking out over its highs. So it's going to be really interesting today, Tom, is that I heard you when you said, you know, you're doing the your show and the update that the NASDAQ, the futures are up over $100. So what you got here, folks, is this. If that NDX can't hold price, then you are going to see, because right now we get divergence. You know, the bottom line is that the say is going higher and the S&P can't hold. So as we make it throughout the day, if in fact that S&P is going to stay lower, I would expect that the NASDAQ would go back into the red. You know, so the battle's out here. And how about the Amazon deal, huh?
Pretty cool, right? I as a consumer, man, that's an industry ripe for it. I couldn't believe, I mean, how about just the price tag? Under $500 million to own all those movie chains. And I don't know if they'd keep all of them or keep them in the same way. But nonetheless, man, it seems like if Amazon can do anything with that business, which it seems like they could, it seems like chump change. Why not?
Oh, there's no doubt, man. There's no doubt. And what has happened in that industry in general, folks, is that let's say for social distancing, is that if you've seen those new theaters with the big seats and they serve you food, it wouldn't be too hard to basically take one seat out in between it, and not every one of them, but you know what I mean? Let's say as a couple, you go to,
sure.
You know, you get
every
two
other one basically,
space,
right?
2 space. I mean, so there's no doubt that's a big number, and we'll end up seeing some basically deals in this space. I mean, it had that even, let's see, someone was going after, and that it was, let's see who it is. It was someone. I'll find this thing, but out of one of the other companies too that's going south in a huge way.
Sure.
You know, there's another billionaire somewhere saying, "Hey, man, I'm going to look at this." So that's what makes a market.
Now is the time when things get decimated, man. You know, it's ironic, right? That literally you could say this Monday, one of the biggest opening days. It's like, you know, between last Monday, just beginning like Georgia, this Monday, maybe Florida in the mix. Next Monday, things really swinging into things. So when do you buy movie theaters? You buy them like the last day they're closed before everything opens back up, maybe? Not bad, right?
Oh, yeah.
I'm just, you know what I mean? That's, it's like because maybe they're rounding the corner of the worst, but guess what? They're going to need a lot of cash to get through some painful months, if not years, man.
They are.
Yeah.
And, you know, what I suspect, now watch how this goes, which is really intriguing. So the way that movie theaters had to be separate from the movie producers goes all the way back to the 1930s. What had ended up happening is that the big production companies owned all the movie theaters, so they had a monopoly. So there's laws in the books that had to separate it. So that's what's so intriguing about the Amazon deal, you know what I mean, for the movie theaters in general, because they're making their own movies, right? So it's like, okay, how can they do this? You know, but I suspect, guess what? When things go south and, you know, that many places can close, well, you know, things change also. So
it'll be interesting, man. It will. It's pretty cool.
Yeah. Let's go take a look at the gold market, folks. So gold out here, you know, bottom line, what you did last week is that you rejected lower price last week. You had a nice sign of strength on Thursday. Bottom line is that we got 114,000 contracts. You're trading sideways out here. Now, this is still in an ABC structure up with about an 1821 price projection. Last high is 1788. And if you take a look at, you know, the equities in general, Franco-Nevada, I believe, just went to another all-time high. Yeah, last week, okay? This baby is a monster. So from March, this went from $77 and 7 weeks to 147. I mean, just monster numbers out here. Yeah, there's no doubt. The snapback was pretty intense. There's no two ways about that. We got to take a look at the now. Silver is still struggling. You know, as we did get a small sign of strength on Wednesday, I believe. Let me get this up for a second. Okay, so
maybe Thursday as well. It was
So let's take a look. You're down 5 cents right now. Yeah, it was Thursday. So what you have here now is that we are finally, bottom line, you know, broke the downtrend that has been in place going all the way over to the 14th of April. And we'll see whether they can get the juice now. That's in silver so volatile, man. That this can, you know, move 3, 4, 5%. It's actually more than that. It's 5 to 10%, whether it's going higher or lower. And most of the time, it comes out of nowhere. So pretty wild.
You know, all these tech stocks, man, just took off. It's not surprising when you have the NASDAQ now up 18 points, right? You were down like 80 points. But, you know, Amazon itself just went from 23.70 to 24.14. You have Microsoft shares that just went from 183 to 185. Apple shares just traded up $4, man, from 307.50 to 311.27. Just a remarkable pop, man.
Yeah,
I mean, Amazon up.
And this is what's so cool about kind of where we are, folks, because just as Tommy's walking you through the strength inside the NDX, and the S&Ps are still staying red, if, in fact, the NDX fails, that's going to be a monster failure, you know, because it's showing that we know that it's a very narrow amount of equities that are inside the market in general that are, you know, running the market. So it's going to be wild watching this, because if, in fact, the NDX keeps moving higher, which it's doing, that'll drag that S&P up, man. They'll say, okay, that's it. I'm buying it anyway. I'm buying it. You know, it's the buy the dip, and I'm buying it. I'm going to buy it right now.
No, because the companies like, you know, Amazon, Apple, Microsoft, Netflix. What's Tesla doing today? Tesla, let's see. Tesla had a little bit.
Elon's getting plenty of. Mnuchin just came out the same thing, saying, you know, listen, California's got to get their act together to get one of their major production facilities up, you know, health-wise, he's saying. But he says, you know, bottom line is that you know, if they want to keep production, you know,
there's going to be pressure. It's happening.
No doubt.
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 231. NASDAQ is up 6. S&Ps are off 24. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 260. NASDAQ is off 5. S&Ps are off 27. And one of our tigers in the den, this is quite a quote, too. There's no doubt, Tom. It's that someone replied to Jeff on Twitter, why would tech decline? And what happens, folks, is that that's the type of comments that you like to see, actually, if you think there's going to be a pullback in the marketplace, okay? Because what you do get, too, is that when tech does decline, there's some of the fastest declines on a continual basis, even though they snap back. I mean, they go down like 20%, like in a heartbeat, a few sneezes.
Sure. I mean, they're trading on multiples, factoring in growth there. So it's not like a company that's, a low PE or something like that.
Exactly.
That things shift slowly. When things shift quickly in the tech sector, PE shifts and things change dramatically.
There's no doubt. Let's go to Jose in Lakeland. What's going on, brother?
Good morning, Tom. Good morning.
How you doing, man?
Morning.
Good. You guys, thank God you guys are dissecting the market on a daily basis. This Ponzi scheme. That's what it is, a Ponzi scheme. But we can still make money.
It's. I would say it's not a Ponzi scheme, but I understand what you're talking about. And what he's really saying, I'd say more than anything, folks, is that when you do have momentum, the bottom line, you can keep pushing until it stops, and then that's the collapse. So, yeah, I mean, the biggest one, I'm going to be talking about this for a while because it absolutely blows my mind that Wayfair went from $21, okay, and it's trading $190 and was $21 in February 19th. And when they pushed it higher, folks, okay, they lost almost 2 times the amount of money they were planning to lose. So it's like,
well,
okay.
I'm glad you use Wayfair as an example. And you can throw in Facebook. These guys, these analysts, They upgrade first half of the year, downgrade second half. They really have no idea what to value these stocks at. But that's what makes it fun. Hey, look, Tom, when Friday at 4 p.m. comes, it's like, man, the market's closed for 2 days. What am I going to do, grow a garden?
You should, man. You got to get outside a little bit, right?
You guys and my parole officer.
Thank God.
You guys are there.
Thank
Tom,
God, man.
The miners are taking it on the chin right here. I'm looking at oil gold down. Well, now it's down 5.5. I just bought some calls. Where is Royal Gold on the buy?
So, what month are you going out?
June. 19th.
Okay. So, you have a monster ABC up. I mean, it blew away a B point on Friday, has the juice behind it, okay? You know, Friday we went from 128, 137. Today you'd be basically taking it back, 137, you're already down to 130. It's really too early right now to say, okay, is there going to be volume on this or not? But I would say that, let me see this. I think this is a 45 A to B, 131.
We're down 4% right now. That's a pretty
31. It's about $41, which gets you 168. I'd stay there. You know, this is an ABC up to 168. That's what it is, you know. And
yeah, I'm just concerned about where's it going on the low side. Tom, I'm at the printers. Well, look, I only put the trade in now because I have a tendency to procrastinate. My dad used to say, Jose, you'll never amount to anything in life. You procrastinate. I said, oh, yeah, just you wait.
Hey, Tom, you are too fun. Just you wait.
I'm leaving the printers with some bumper stickers. Can I run one up the flagpole and see if it waves here? See what you think?
There you go, man. Okay, man.
Trump.
You got to be the new Jay Leno out here, man.
We're gonna have to get a segmented out.
Yeah, I think so.
For Jose.
Hey, man, have a great one.
Thanks, man.
Have a great one, man. Took me a second to get that one.
Hey, it's not bad. Have a little fun with the market, man. Gotta love the calls. It's perfect. Thanks, Jose.
Yeah, totally. So you can see this the NDX. Let's look at this here because this is going to be so intriguing. It's you made a nice little run here, and then someone's right against that. So we came. Let's see this. Okay, so this is intraday you're looking at right now. So. You know, last night, man, I mean, this set a big number, folks, okay? 92.85 was the number. What we did just now is that we just came up to ice, basically at 4:30 this morning. And we'll see whether it can basically do anything. You know, what it's going to take is it's going to take one of those chip stocks to go south. And, you know, we'll see whether, you know, that's what we end up having out here. There's no doubt that you got the stores are going to be, Apple stores are going to be opening, I guess. To me, Apple right now is dying on the vine. I mean, big time, too. So, you know, we were almost made it all the way back to its highs. 327 up here is the highs. And we've done 311 out here today. But you can see this would be the classic. Like, if Apple closed today, folks, 310.50. Under that would be the classic because it's into the gap. It's already tested the 310.50 or 311.45. And if it gives it up, that's going to be like, okay, man, we know at those last highs, the bottom line is you didn't have a lot of buyers. We're going sideways for quite some time. Do you know what I mean?
Yeah, and it's just quite a run it's had in recent, you know, in the last month or a little bit more. So
right. So there's a question in the den right now, Tommy. Would I start shorting Wayfair? And no, I wouldn't. This is why, folks. Okay, listen. I go short the markets all the time. And when you see an equity, however, that is bizarre as this. Okay, like right now, this is a 36% short position. That it's up $1.82. The reason I wouldn't short it is I can't figure out why it went from 20 to 180. You know what I'm saying?
Yeah.
It's like, okay, if it went from 20 to 180, folks, okay, and losing is even more money than they was expected, guess what? This can go from 180 to 360 like in 10 days.
It's got a lot of room when it's got $18 billion of market cap.
It does.
At that level.
Yeah. And more than likely we got a squeeze going on simultaneously. God
bless the 22.7 million shares that are short.
Seriously, man.
Remarkable,
yeah.
man.
I mean,
It's a Tesla story, kind of. I mean, not quite, because Tesla changed the way the world operates, man. Wayfair is not changing the way the world operates. Okay.
It's what you got to do, folks. I'm really familiar with Wayfair. We buy so much stuff, for the real estate company online. It's insane. And what you want to do, buy something. No, don't buy it. Just put it up. Put it on a Wayfair site, and then go to Amazon, and you're going to find almost the exact same thing. And I guarantee you're going to be paying 30 to 40% more in Wayfair. It's like,
cool. I'll do some price shopping, just playing around on there. Yeah, I'm interested as well, man. Because yeah.
And they, it's so crazy. They have a good reputation. Over the house on the weekend, I had 2 or 3 who were looking for something. And Ali said, "Yeah, go to Wayfair." People say go to Wayfair in a second because it's a beautiful site. I get why. It's definitely a beautiful site in the context of visually when you're looking at it, and they have a lot of high-end things. So I can picture, whether it's on what Instanet? No, what is it?
Instagram.
Thank you. Whether it's on Instagram, whether it's on pins, you see a lot of the design is out there, folks. They use Wayfair. They put it out there. So. Stay right there. Tommy and I are coming right back. We have the Dow. Dow Industrials right now down 218. NASDAQ is up 13. S&Ps are up 23. We'll come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 211. You get the Nasdaq up 11. S&Ps are off 23. So let's just go inside the Dow and see. The Dow. The bottom line is that last week, bottom line, you get 4 days up in a row, 3 days up in a row. But the Dow never even got up into this swing point of the 29th, which is the 24,700. We got to 24,349. Now, inside the Dow, strength versus the weakness out here this morning is you have the weakness. So you got Boeing down, putting 33 negative points, Caterpillar 26, American Express 25. Apple is the gainer, putting 12 positive points, United Health 8, Home Depot 6, so.
All the airlines and Boeing included, you have United giving back a good portion, down 7.3% today. American down 4.6% today. Let's see, Delta shares 4%, and Boeing shares down like 3.6%. So all of those giving back after they had a little bit of a reprieve at one point last week, right?
Oh, it's a monster, man. This is serious business, man. I can't even comprehend the amount of cash that they're going through. The problem, is that the way that the airlines are set up is that they, of course, accepted the government's money. And part of that, folks, had to do with the aspect where they got to keep all their routes flying. Now, that's pretty intense, man, because the bottom line is, right. I don't care if you have $100 million, you fly, what their overhead is. You fly for 3 months, well, there's $100 million,
We've heard the stories, right? One person, 2 people on the entire plane. And they have to go to the government, I think, and petition to cancel any routes if they, and it's probably, hopefully it's that there's still availability on other airlines or something like that, right? If one airline's just decimated, maybe people can get around it on certain routes. But yeah, they're supposed to remain open. That's part of it. Business travel is open. Just tough.
Yeah. Yeah. Now, there's something that's happening. This is something you want to keep your eye on, folks, because J.P. Morgan looks like it's going to do an ABC down. And, I went through a couple of the other bank stocks, and it's not that they're getting hit that hard. J.P. Morgan, you're down 290. You're at 89.73. Well, J.P. Morgan only needs 20 million shares breaking this little B point here, and it's already got 9 million. So it's like, okay, what is pushing this lower,
These bank stocks really haven't had a rebound like most other stocks, man. They're right near the bottom edge of whether it's J.P. Morgan, whether it's Bank of America, right? Yeah, whether it's Citi. Let alone Wells Fargo making lows today below any of the lows it's had in the recent. What do I have? I got a yearly chart going back a year for Wells Fargo.
Yeah, and what I expect you're going to see, folks, is that with all these programs. You get the programs that are out there first. One of the larger ones, and we'll see how this is going to shake out, one of the larger ones is the aspect that I'm not sure whether it's 3 months or 6 months that if you have a Fannie Mae or Freddie Mac loan, you don't have to pay it's deferred for 6 months.
Okay.
Well, all of this stuff is going to end up hitting these banks, man. It's one way or the other.
Right.
You know what I'm saying? And then the real question is going to be, do they change the rules in the middle of it? And then they really get whacked. You know what I mean?
Because that's what I said. When you see politicians out here, man, it goes both ways. I'm pretty liberal, but when people start talking about rent forgiveness, I want that. But for how long? Because unless you're talking about landlords get loan forgiveness that they have to pay the banks for the properties they own, and then unless you're talking about the banks get forgiveness for their loans, or it goes right up the chain when you start extending it that long. And maybe you're seeing that hit. That's what I'm tying into, because you can't just. It isn't everybody. It's a tough deal. You want people to be taken care of, right? No evictions at a time like that instantaneously. But you got to be careful, man, because everybody has bills to pay up and down the line, and that's where things get really bad when you have nobody paying bills up and down the line.
Right, and New York City. That's some heavy business, man.
And you told, not to jump in, it made me think of, you told the story of Airbnb, right? Or all these people. So they have many properties, they're running businesses, they're paying loans on properties, renting those properties out, so they're not collecting rent, and then they have all their bills mounting up, and then they're going to be defaulting, and then that goes up and down the line in the same way.
Oh, It's a big number, man.
Yeah.
And and then what it does is that then it simultaneously empowers the aspect that, you have groups that just figure, and this is in New York in particular, that, hey, we're going to have a rent strike and we're not going to pay rent for a year. 8 months. They're out to 8 months right now. That's scary
stuff, man.
I
don't think that ends well.
So who's going to pay it now?
That doesn't end well for anybody.
What's going to happen here, man?
Yeah.
Crazy. So let's go take a look at some of the higher volume equities out here this morning, and we'll find out today, folks. We'll find out whether you get any volume. If this S&P stays lower, you want to be looking at that, because if in fact you get an expansion of volume, you can get follow through. If we don't get an expansion of volume, this thing will pop in right back topside. And the higher volume equities out here today, Advanced Micro's up the most. Volume-wise, that's up $1.43. You got Delta down 74 cents. Apple's up 196. Transocean, I don't even know why they're still in business. They're trading $1.44. That's going to be the next service of going out of business inside the oil service company. There's J.P. Morgan down $3. You got Uber is off $1. Nothing big there. I think it's going to be intriguing to see how many streets and cities that they actually do close down. They haven't closed down St. Pete yet. I think they've done some in Tampa, right?
I'm not sure.
Yeah.
I've read some. I believe so.
Yeah.
I think maybe in Ybor.
They did. That's right. Ybor. They definitely did. Yeah.
Because it makes sense. That's not a super high traveled road within Ybor. If anyone's familiar with Tampa, right? Older area. It's not like a thoroughway road that's necessary. Probably shut it down. So much business on that road, they can open it back up. That reminds me of a few roads in St. Pete. They could probably do the same thing, right?
Yeah.
Heavily, whether it's Central or the beach
and
drive.
That's gonna help the Uber and Lyfts of the world, man, if they do that right across the country.
Because, agreed.
You're not going to bring your car. If you're in the inner city, you're going to ride $6 to $12. You go downtown, you can have a beer. You don't have to worry about getting back in your car again. You're walking around.
Yeah. In a lot of places, you're seeing that they might open something up, but maybe they don't want to encourage mass people coming there, so the parking is limited or something to that capacity, which seems completely reasonable.
Oh, that's a good point, man. I wasn't even thinking of that side. That's a huge point. And if they want merchants to make money, I think it's already proven inside major cities. You get rid of those cars. And, the car companies themselves, for what reason this has taken so long, the car companies, I remember when this first started happening, it was in Boston, actually, Tommy, almost when you were born, before, when Faneuil Hall started happening. They wanted to block roads on the outside. The car companies went out of their mind saying, no, inside, because guess what? You stop blocking cars, right? It's, hey, why do I need two cars, right?
Right.
Now, we didn't even have ride sharing then. So this has been going on for quite some time as to major cities and thoroughfares, should a car go down the road or not,
It's an amazing time where, things are shifting dramatically, man, and this is just going to accelerate it like we talk about.
Yeah. Dow's down 217, NASDAQ is flat, S&P's off 24. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 200, Nasdaq's up 11, S&Ps are off 21. Let's go back to AMC for a second. What you're going to see here, I just saw this flashing across, Tom. So AMC, it opened at 640, went to 641. Now we're at 511, and it hit a low out here thus far at 489.
And it actually made it up to 755.
Oh, pre-market.
Pre-market.
Okay.
Go ahead.
Cool.
Yeah.
So, yeah, this is what just come across the tape. Now, this is going to get really interesting. Let's see. Where is it?
The number 3, I think.
Number 3. Okay. Yeah, there it is. Okay.
Right.
So I don't know what this website is, deadline.com. There are no talks between Amazon and AMC Entertainment about a potential deal. Deadline.com just reported unnamed sources.
So here's the... sorry, go ahead. What were you going to say?
No, go ahead.
I was just going to say it's really tough to prove a negative, as in even to report a negative, right? To be certain, it just strikes me the first thing to whoever reports that, right? Did you talk to every executive with the available nature to be in those talks? Because there's a lot of executives in Amazon that might have the potential to start a talk like that, versus you get one reliable source that says, listen, I know there's an executive in the C-suite, that's talking to an executive in the C-suite of AMC. So it just struck me at first to say there's nobody in Amazon talking to anybody at AMC. It's like, have you examined all avenues?
Yeah.
Anyway.
I can see that in a second. Because what would happen here, folks, is this. See, the thing that is really wild about this one here is that I would say common sense, it really makes sense that an Amazon can go after this.
I do too.
Yeah, and what it really is this. They already have the name, they have the facilities, but what they can do right now, like if you and I were buying this company, Tom, right?
Yes.
The next thing I'd say to you, I'd say, okay, man, can you go out there and let's go talk to their landlords? And I'd want to make a deal with the landlords first, right? That we have the leases, okay? And what happens with an AMC, folks, okay? There's the Brookfield is going to be one of their biggest landlords. SPG, Simons is going to, between Brookfield and Simons, folks, okay, they own, I don't know whether it's 60% or 80% of every big mall there is in the whole country, in the United States, okay? So if you're on that side, what would you rather do? Now I'll flip you on the other side. If you're them and I'm coming to you and I say, okay, let's negotiate something out. If I was paying $1 a foot, can we do 75 cents? Can do 60? So I think that's where the value of the deal comes in.
It's a great point, man. I hadn't thought of it. If you're a mall owner, wouldn't you love to have Amazon as your tenant, as opposed to having AMC that's potentially on their way to bankruptcy in an industry that they're being pushed out of the way.
Right.
But we don't even know if it's valid or not, man. $2.50, it's paired off the high of $7.55 pre-market. But I agree in terms of the speculation because, everything's changing so rapidly, right? We saw the stories of their talks about what was the movie that just came out with De Niro and Scorsese?
Oh, yeah.
Whatever it was,
I watched
right? They were trying to get it into theaters, then they're trying to rush it from theaters. Everything's changing in terms of the norms. How long it's in theaters, how long then it has to wait to go from theaters to on-set demand, on demand. And what better way to disrupt the entire industry than to buy AMC for less than $500 million? You show all your movies that you want in there. You show them for 2 weeks. They're eligible for Academy Awards. You own the whole distribution. And because the world is changing already, man, people love going to see movies, the statistics don't lie. Star Wars, right? Marvel, Jurassic Park, maybe animated movies for the kids and stuff like that are pretty cool on the big screen. But right when they're off there, you're going to see Disney and Netflix and Amazon just trying to push it as fast as they can out to the streaming because that's what they trade off multiples, man, of streamers.
Yeah, and you know what I could picture? Now, this would be really twisted, but Bezos is so freaking smart, man. He can turn around and say, hey, guess what, Netflix? I'm going to make another deal with you. I'll start running your stuff in here. I'll start running Disney stuff in here. He just might change the whole structure. Like, you don't have to be the studio. You know what I mean?
Yeah, I think if they bought AMC, you wouldn't see it as a Amazon-only production,
Right.
Right. It would just be that they'd control it. But they would, I imagine they would be offering up other services, I think. I don't know. That would be my first.
Listen.
Because there's a lot of money to be made doing that as well. You own every big movie theater, man. Netflix wants to be in movie theaters. They want to be eligible for Oscars. They want to be producing big budget films. Well, Amazon's going to get a cut or build your own brick and mortar movie theater system.
Yeah, no doubt.
Yeah.
Let's go take a look. We know the transports just have been devastated. And I guess the real question is, folks, it's what's going to get these things back? Now, they're trading sideways out here today. I think the only transports that have any traction, actually, are the trains. So, look at this. Out of the whole thing, well, you got Charter Communication. No, C.H. Robinson. Okay, so that's a trucking firm. That's the only one that's positive out here today. Avis. Let me look at Avis again. Avis is down $1.60. Yeah, this is... Well, doesn't look it's Avis doesn't look like it's done like Hertz. I wonder why. It's so in Avis's case,
maybe Hertz. I'm just throwing out. I wonder how much of their business relies on corporate travel. Hertz, I always see that the club, the business travel,
right?
And we know that's going away, man.
Yeah. Oh, there's no doubt. I mean, I've been one of those. Yeah, Hertz is done, man. Big difference, man. Whatever that model is.
Yeah. Speaking of done, can we jump over to Under Armour, man? They may not be done. I exaggerate, but their earnings.
Problem.
They got a problem, exactly.
Yeah. And
UA is their symbol. Where are you? You're on some crazy bond or something.
Yeah. Look at that. UA.
That's where it keeps bringing you there. I have the stock up here. They can jump to my stock. It's not. So you go from $24. Now, this is what's remarkable, right? Less than a year ago, you were at $24. The slide for COVID began when you were trading at about 18, and they're down 12% today, man. Now, what was, as I started taking a look at this, I mean, you have huge problems with this regardless, right? Where the CEO stepped down, and then they came out and said they're being criminally investigated for basically cooking their books. combine that with the woes of the industry. I mean, for comparison, right, I have the chart up here going back, what am I on, a weekly? Let's just put it on even a daily going back a year. You see the pain. You see no rebound whatsoever.
Right.
The Nikes of the world, they're up 50% from the lows, and you're within $15 of the high, from 105 to 60 to 90. And Under Armour, you just went from 18 to 660, and now you're at $7 still.
Right. And the investigation in this, folks, has to do with inventory, stuffing inventory, okay? And that, inside the retail business, it's very easy to do. It's a monster fraud. And it's hard to get caught, because what ends up happening is that as the retail is going out, the accountant makes the call, well, that material's not good anymore, we got to write it off, versus they don't. And this is when they will throw everything in there, and you can see just in the loss per share, they were expecting to, have 5 cents, and they lost $1.30, man. So
yeah, big trouble.
Stay right there. Tommy and I come right back, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 180, Nasdaq is up 20, S&Ps are off 19. And, I find it amazing, we've been talking about this a bit, that, you can get money, folks, okay? It just depends on what price you get it at. Like here...
I saw that. Cool. Take a look. Yeah.
The Viking Cruises is going to basically going out there is going to try to get $600 million at 13%. United couldn't do it last week. Well, United didn't want to. They were at 11.5%, 12%. I guess they didn't want to pay that.
Okay, I saw that they pulled that. Yeah.
Yeah, but
okay, if the cruises, man, that's the most speculation out there in terms of 13%. Good luck, man. I don't know. I mean, we've had callers into the show, man, that are cruisers, and they're saying, listen, man, that's the one thing I love cruising, but it's going to take a year or two to feel comfortable, right? The point is to enjoy yourself.
I'd say that's correct, and that would mean that someone else has to be the guinea pigs for that year or two. You have cruises that have to go out, folks, cruises that come back, and they don't. The first time that we hear a cruise has gone out, and then bottom line is that people are trapped like rats again, and they get in, COVID-19, then, oh, man.
That 13% ain't going to be worth nothing, man.
Zero.
In terms of getting that loan, yeah. And it's like, you have Disney Shanghai opening today, and they sold out 30% pretty quickly. So you're going to have people, 30%. You're going to have people. 30%. You're going to get those types of numbers for sure.
Right. And you're not trapped in Disney. I mean,
no, that's the huge difference, right? I just bring it out, right? The world. I'm not. You won't catch me on a cruise for a couple of years, man. And we're in Florida, and I've been on one before, and I'll go on one again, but not right now.
Exactly. Stay right there, folks. We got Think or Swim coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave. Wait, I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.